What's up, everybody? It's your boy Stevenson Lindor back with another educational video. I haven't done a video on trading in about 3 months, right? So wanted to get back and, always drop some nuggets and hopefully, help the masses out there take their trading game to the next level, right? Last few videos I've done have been about testimonials of a new community that I've been building up. So I said, you know what? I need to get back to providing the knowledge and education that people pretty much come to my channel for. So what's going to be the subject of topic today? And today we're finally going to dive into the famed Renko charts, right? So what is Renkos? All right, before we get into that, right, let's go back to candlesticks real quick. So most traders, when they're trading, they usually start with candlesticks, right? Now, candlesticks are a form of price action, all right? When people say, hey, I trade price action, it's like, okay, yeah, cool. Everybody trades price action, but price action based on what they see in front of them, all right? So candlestick price action is based off a number of things, right? Time, so that means every 5 minutes, a new candlestick is formed, right? It's based off volume, right? The size of the candlesticks, right? Contrary to popular belief, you don't have the same size candlesticks. Each candlestick actually has its own size or volume, always have a different volume for each candlestick, right? And candlesticks is affected by the news, right? So anytime there's a significant news event, right, for that currency pair or that index or whatever it happens, you happen to be trading, all factor into candlesticks. So that basically, in a sense, makes candlestick very noisy, right? That causes a lot of fluctuation, up and down, up and down, up and down. Actually, I was doing this the other night. Perfect example. Look at this chart. Euro Swiss franc. Look at this. Very choppy. Look at this. Super choppy. The average trader, if they were trading inside of this, this would be very frustrating. Up and down, up and down, up and down, up, back down, up, back down, up, back down. Very, very noisy, right? And as you guys know, a great percentage of trading, honestly, the bulk of it, about over 80, 90%, is based off psychology, mindset. So most people are easily psyched out when it comes to trading, right? They get frustrated very easily, especially when they don't see the market going in their favor. So looking at candlesticks, this can be very frustrating, very noisy, right? So here comes Renkos. Now, Renkos is a different form of price action. Renkos was actually created by the Japanese, right? It's Renko is actually the word for bricks in Japanese. I think it's called like Renga. Yes, Renga, right? And how Renkos performs is it's not time. It's not based off of time. So just because a 4-hour time frame has passed does not mean you will get a 4-hour brick, right? And each brick are positioned at a 45-degree angle, right? Equivalent to the next brick. So if a new brick is going to form, like you kind of see one forming right now, you see that little pink trying to form? In order for it to fully form, it has to be equivalent to the next brick, right? So unlike candlesticks, Hakanachi, it's not based off of time. It's just based purely off of price, right? So this allows for traders to trade a lot more smoothly, right? Look at the difference between this and candlesticks. Again, very choppy, very noisy, very annoying. Renkos, clean, not so much choppy, not so much noisy, clear direction of where the market is going. Now, there are some drawbacks with Renkos, absolutely, right? Nothing is perfect at the end of the day. So Renkos, because it doesn't change every 1 hour, 2 hours, 5 minutes based off the time, it's a lot harder to see what's actually transpiring, right? Where candlesticks, you're getting different patterns forming. You see, bearish flags more often and reversal patterns, M's, W's, all that stuff. You won't see that as often with candlesticks. So for example, if I go back to, Renkos. So for example, if I go back to candlesticks here, right before this drop right here on the 15-minute, you had a quick small bearish flag. If I switch back over to Renkos, you wouldn't have noticed that flag. It would have just been one solid brick, price coming down. All right. Not only that, Renkos has a tendency to repaint. All right. What is repaint? Basically, Renkos will start painting a brick where it will have you convinced that price is going in one direction. So let me see if a brick is forming over here. There we go. See that? See that purple brick right there, right? Trying to form. So a lot of times traders will see that and think, oh, price is coming down. And then out of nowhere, it'll whipsaw and go the opposite way. That's why it's very important when you're trading on Renkos, you must use it in conjunction with something else. You must have some other form of technical analysis to play with it. All right, just for that simple fact there. All right, and if you use it correctly, you'll come to find out trading Renkos is a lot easier, simpler, and more productive. All right, especially for the mind. Like I said, a lot of people, the hardest part of trading for them is the mindset, right? Mindset is everything, and people get anxiety. People, let their emotions get the best of them. So you always want to trade with a clear mind. All right. So how do I effectively, and how can you effectively trade with Renkos? So I'm going to give you a couple pointers. All right. Now, as you can see here, I have the MACD indicator. All right. Now, all you have to do is go on your trading view, click on indicators, and just type in MACD. All right. MACD 4C, if you want first off, the original MACD indicator is this, right? So the original MACD consists of three components. The histogram, right? Looks like a mountain in the background. And then it has the two moving average. That's what the MACD stands for. Moving average, the two moving average, convergence, divergence, right? And then the histogram. Three components. So the two moving averages and the histogram. This is the original MACD. Now, this is just a matter of preference. I don't pretty much use the moving average. I use this MACD. So it's a matter of preference. Either or, it doesn't matter. Just wanted to point that out there. MACD 4C, that's the one that I have. A lot of people like the squatter, the one with the single line, right? That one right there. See? MACD 4C, squatter. And if you want, you'll get that one single line. So it's all about a matter of preference, right? I like the MACD 4C, that's cool. All right, so I have this MACD here to help out with basically understanding when I need to buy or sell. All right. Now, before I get into that, another thing you want to notice with Renkos is not only is it a lot cleaner to look at, but you should also notice that there's not wicks on everything. Where candlesticks, you have wicks everywhere, right? There's a wick everywhere. Wicks, all the candlesticks have wicks. So it's wicking up, wicking down, wicking up, wicking down, right? Again, a lot of confusion, especially if you don't know what you're doing. When I switch over to Renkos, you don't have a lot of wicks there, right? So that's a huge advantage because now, because wicks are so minimal on Renkos, you can use that to your advantage, right? And a lot of times, if you notice, every time you see a brick with a wick, notice how price pretty much goes in that direction, right? Now it's about actually catching it at the right time. So for example, like, see this brick with a wick right here? This would have been a bad time to really buy. Even though the next brick actually did form and go up a little bit, eventually this came down, right? Same thing over here. This would have been a bad time to buy, right? This would have been a bad time to sell. See that brick with a wick, right? So how do you know when to buy, when to sell? Well, this is where the MACD comes into place. And again, it filters out the repaints of Renko. So you know when you're ready to buy, your buy is there. When you're ready to sell, your sell's there. Now, when I'm looking to buy or sell, right? So for example, again, if you notice with Renkos, right, it's a lot cleaner to look at, much cleaner to look at. So look at this flag right here, right? Remember, price came down. I got an impulse, then a flag, then a continuation, then another flag, and then another continuation down, right? So when I'm lining this up in conjunction with my MACD, what I want to do is basically I want to wait for price to pull back, right? Because remember, we're in a downtrend. I'm looking for this sell. But remember, you never want to sell at the bottom of your MACD or buy at the top of your MACD. These are bad positioning, right? That's why I said if you were buying here, this was bad, right? You want to buy as low as possible, right? So key component is waiting for price to pull back to that zero line, And once it gets back to that zero line, now you're looking for those reversal points, right? Now you're waiting for like a reversal brick with a wick, right? So you see this brick with a wick right here? This one has been good. Why? Because look where you're at. This one has been good. Why? Because look where you're at. This one has been good. Why? Because look where you're at. And then this would have not been good. Why? Look where you're at. This would have been good up here. Why? Because now you're dead center in the middle, right? Momentum has shifted. You waited till price came up to the zero line, and now you're waiting for a little bullish momentum. You see how price came all the way up, right? And my trick is I'm waiting for a brick with a wick or basically a couple bricks to head in that direction before jumping in for a sell, right? Same thing if I was looking for a buy, right? So right before price went on this big uptrend here, again, look how when price came down, right? I hit a nice support area right here, and then perfect. See right here, momentum, right at that zero line. Now, brick with a wick, and strong move to the upside, right? So basically what I'm saying is you should always be looking to buy or sell when price is at the zero line, not when it's in full momentum. Because when you're in full momentum, you've already missed the trade, right? See, look at here. Look at momentum right here on your MACD. Look at where price is on your MACD. It's trade. Remember, you're trying to sell as high as possible. This is where you want to trade. This is where you want to sell. This is where you want to buy, right? Sell at the top here. Here. Not here. Right? Look at momentum. And that's where a lot of people go wrong. But you can only do that, right, by waiting for price to pull back. All right. So you want to practice this. And if you notice, when you do this, your trades are going to be a lot cleaner. All right. So again, when I'm trading, it's going to look something like this. I'm going to go on any time frame, doesn't matter, right? Keep in mind, the higher the time frame, the longer the wait. That's one thing I forgot to mention. When you're trading Renkos, it's a longer wait period than trading normal candlesticks. Candlesticks based on time. So every hour, a new candlestick's going to form. With Renkos, it's only going to form unless price holds. Price has to push. So 3-4 hours can pass before this actually turns solid, right? So we're talking about a longer wait period. Just to give you an idea, it's like I said, before price crossed back over the 31st, right? Right here. See this? From 1 hour. This is on the 1 hour time frame. Crossed over here to the downside on the 27th. Talking about basically 4 days before it came back down. All right. The higher up you go, the longer the wait period. See this? Look at this. 4 hour time frame. The downtrend began here, didn't come and retested until here. Look at that. The downtrend basically started in December. The end of December, it didn't retest until March. So the higher up you go, the longer the wait period. So I tend to use the smaller time frames when it comes to Renkos, but all other rules still apply, right? I'm still gonna identify my overall trend. So trading Euro Swiss franc, I realized, okay, we're in this downtrend, right? And I'm only gonna jump in a sell once, right? My MACD pulls back to that zero line. Pulls back to that zero line, I get some bullish momentum, right? You always wanna see some momentum of the other side, right? So if I'm looking for a buy, I want to see some bearish momentum before that buy happens. If I'm looking for a sell, I want to see some bullish momentum before that sell happens. Let that pull back, and literally all I'm waiting for is about 2 bricks or a brick with a wick to confirm for that reversal. All right, and as you can see, brick with a wick, sell entry there, stop loss there, move to the downside. All right. Now, there's some other tricks that you can do to further increase your success rate with Renkos, but I just wanted to drop some free knowledge, free nuggets, and show you guys how to effectively use this. Of course, hopefully this has been educational for you. Once again, guys, you can definitely hit me up, email me, write me, and let me know your thoughts in the comments below. Wanted to get back out here and, you know, as always, provide as much value to you guys as possible. Hope you enjoyed this video. See you on the next one.